Welcome to the first episode of the Bull and Dale podcast. For our very first episode, we've been so lucky to get Robert Breedlove, one of the most interesting thinkers in the Bitcoin space at the moment, and a big profile in the international Bitcoin media space. Robert describes himself as a freedom maximalist and has a podcast called What is Money, which is a perfect subject to start off the Bull and Dale podcast. So thank you so much for agreeing to join us today, Robert.
I'm glad to be here, guys. Thank you for having me.
Would you like to tell our viewers a little bit about yourself and your background?
Yeah, sure. I'll try to keep it brief because I think I've covered this other places. I have accounting and finance undergraduate degree. I have a master's degree in accounting and finance. I was a career CFO, pretty much focused in tech. Before I originally discovered Bitcoin in 2014, but didn't start to go down the rabbit hole actually until 16 and 17. Okay. And at that time, I'd started my own consulting practice, didn't really know what I was going to do beyond just kind of CFO consulting. And then that's when 2017 happened, which was a gigantic explosive market. I think the market was up 1,800% in a year. And during that year, we ended up launching a couple of crypto asset hedge funds, originally very much a multi-strategy approach. And over time, because I had so much focus on the space, I was writing these monthly investor reports, et cetera, et cetera. You know, we're studying investment theses on these individual assets. I just became much more narrowly focused on Bitcoin. I had this prior, I guess sort of in a prior life, this was back in 2004, 2005, I had studied central banking very deeply, particularly going down the rabbit hole of G. Edward Griffin's work, like The Creature from Jekyll Island. And when I snapped that piece of the puzzle in, that Bitcoin was the solution to central banking, that's when my whole life changed, pretty much. And I've been actively, writing, studying, and most recently educating people about this topic. And in 2020, I actually decided to get out of the hedge fund business entirely and just pour all my energies into this. And that really was catalyzed by this quote. I've shared this before too, but I think it's profound. This quote I heard from H.G. Wells, who said that civilization is a race between education and catastrophe. And it feels like we're seeing the world come apart at the seams in a lot of ways today. And I wouldn't identify central banking and the corruption of money as the sole cause of all of this, but I do identify it as a significant contributor to all of the cultural divisiveness and, institutional distrust and unraveling we're seeing in the world. So I hope to help open people's eyes to the truth of money and how Bitcoin fixes, quote unquote, this, which is a lot of things.
But on that, do you think that central banking is a cause or a symptom or something that is even deeper in kind of how we organize society?
Yeah, someone asked that the other day, is like, clearly we only construct institutions that are useful to ourselves. So how did we get to this point? And I think it's a combinatorial factor, actually. So there's two things. One, we know human beings have a sinful nature, or we are corruptible, right? And it's pragmatic and economic in a sense, right? Like you see this in nature as well. If a organism can deceive another to take its work, right? I was watching this documentary the other night, and there's a bird that will actually put its egg in another species of bird's nest.
Yeah, they could.
But it's a slightly bigger breed of bird. So when the babies are all feeding, this interloper bird actually gets most of the food and outgrows the other birds, and the parent birds don't know the difference until it's too late. And by the time they do notice that this bird is not even of their species, they've kind of accepted it as their own. So when there's payoff to deception in nature, organisms will adopt a strategy to deceive, basically. So human beings are no different, right? If we can construct an institution, and I would put both the central bank and the nation state under this canopy, that they are able to derive revenues deceptively, effectively. That's, inflation today, we've been conditioned for over 100 years through Keynesian central bank propaganda to believe it's a normal, healthy part of an ongoing economy. And if you study it from first principles, or an a priori epistemological basis, there's not even a question. It's not a debate. It's not an opinion. It is mechanically solely theft. You're just purely arbitrarily allocating wealth from some and giving to others. Full stop. There's no debate. There's no talk. There's no argument. I say that strongly because it comes from, it's deduced from a first principle to get to that point. Anyways, we don't have to go down that rabbit hole. So I think this combination of man's sinful nature, and I describe this as we're all trying to get something for nothing. This isn't necessarily a bad thing, by the way. This is also the entrepreneurial spirit, right? The entrepreneur is someone who wants to solve a problem more efficiently. So he's trying to become more productive or to get something for nothing. The problem is that when we decide in our pursuit for something for nothing to cross that line of transgressing against the property of others, which means the time of others or the things they have created with their time, effectively.
By extension, their very liberty.
Exactly, 100%. So violations of property are violations of liberty or freedom. So what I see is we have, gold was selected as money for reasons I've talked about ad nauseum. It's basically best exhibited the 5 properties of money, but it was limited. It had technological limitations specifically related to its portability, right? It did not.
Properties, just for the audience,
Sure. So gold, the properties that make good money good are divisibility, durability, recognizability, portability, scarcity. Of all the tools available in the world historically, monetary metals, and we've tried a lot of different things, right? Seashells, glass beads, cattle, et cetera, et cetera. We settled on monetary metals as the most divisible, durable, recognizable, and portable tool in the marketplace. Of the monetary metals, gold was the most scarce, which is to say the most resistant to supply inflation. So you could put your wealth in gold and you had maximal assurances that you would not be debased or diluted over time. So, but again, the problem with gold is that it's a heavy physical metal. It does not scale for a globalizing marketplace. And so another slightly more cosmic way to think about this, but it clicks for a lot of people. That answer, an answer to the question, what is money? There's many, many, many answers as I go into my show, but one of them is money is a social device for expressing value across space and time. So gold was amazing at holding value over time because it could not be inflated, could not be diluted. However, its physicality and its bulkiness made it very poor at expressing value across space, right? It's not liquid. It's not portable. Therefore, we introduced this institution, which originally was just a warehouse, right? It was just a private business. Put your gold with a warehouse custodian. He'll give you a warehouse receipt. And then market actors, being smart and pragmatic, they start to trade these paper receipts as money effectively, right? Because they're as good as gold. They were a call option on gold. You could take it to the warehouse and redeem it at any time. That led to the centralization of gold custody, and then basically created an attack vector for the custodian to issue more paper receipts than their gold reserves could justify. So that's my answer. It's a long-winded answer maybe, but you get this two-factor thing. You have people trying to get something for nothing, right? And if there's an opportunity to deceive or defraud, some will do that. Some people will inevitably do that. And then we had this problem with gold that it didn't scale, right? It was excellent for expressing value across time, but not space. So we needed to abstract it into currency to get it to scale and to get it to make it more transactable across space. That created the opportunity for the first point, the people to defraud and get something for nothing, to create and corrupt this institution called the central bank. And then you know, it's not just, here's an important point too. There might be a slight proclivity for people to think, oh, it's us and them, like good guys, bad guys, elites, the 99%, something like that. I think it's more like, you know, this happens over generations. And I think it's really self-deception. You know, I actually think a lot of these central bankers, Keynesian economists, they actually believe what they're saying. They have drank the Kool-Aid so deeply. They think you can just print money and control money and, you know, drive the economy this direction or that direction, which is, you know, it's an abhorrent ignorance of complex systems, frankly. To think you can drive or control an economy is like saying you can control the weather. It's absurd. But I think they have just really stooped themselves in self-deception.
Right. They're not coming from a point of malice. And I mean, this is something that I've also thought about when it comes to the invention of Bitcoin, that obviously it didn't happen sooner than it did. So anyone who made any action in how we formed our money, and especially, you know, in the harrowing circumstances after World War II, were constrained both by what kind of innovations were actually available to them to design a new monetary system, and of course by what kind of trust remained in the system. So I take that point very well. The difference between thinking of us as us and them, the good and the bad guys.
Yeah,
that even the bad guys in the story have been constrained by their options.
There's not good and bad guys, right? The world is a billion trillion shades of gray. And just very simply and obviously, if you had the ability to create a machine that could print money ad infinitum, would you not do it until the machine stopped working?
Well, I would do it, but I would try to put a constraint on it that is just so strong enough that people don't usurp the machine.
Well, you say
let's say an inflation. Let's say an inflation. I'm supporting you up on this. That let's say an inflation target, for example, is a perfect way of finding a level at which people's confidence is not eliminated so strongly they usurp my ability to continue printing money. But I will.
Has an interest in preserving the host.
Right.
You don't want to tax them too hard and kill them too quick, because then that's your own livelihood you're jeopardizing. So, you know, it's an absolute power corrupts absolutely thing. You give absolute power to control money, which is to control the property and time of people, to steal the property and time of people through printing money, and it corrupts absolutely. Therefore, we have a fully corrupt institution running the world today called the central bank.
But just to stay a little bit in the biological analogy here, because obviously you have parasites that eventually kill the host. You also have parasites that form a symbiotic relationship with the host. Do you think it would be possible to have some form of monetary policy or some form of engagement that could be better than just a pure commodity money or a pure kind of non-controlled money? Do you see any value at all? I mean, obviously, if you can go too far, you can inflate away people's money, but also there's no denying that you do have credits or cycles. You have unemployment. Do you see any potential role of government in balancing that, or do you see that as kind of purely negative long term?
A number of things there. So I talk a lot about the book Human Action. And it's a very powerful book. It's a very difficult book, but without trying to explain, I'm going to try to put it as simply as I can. When we take voluntary action, right? When I enter into a trade willingly, and the other party is also a willing participant, a willing counterparty to that trade, we both execute the trade in a way that we both believe we are better off after the fact, right? I have apples, you have oranges. You value the apples more than you value the oranges, and vice versa. That is why we trade. So value is created exclusively through voluntary exchange. This is a very key point. It's a very deep point, something you can think about for a long time. Government action, by definition, is funded by involuntary exchange. It is value destructive. So you would think that, oh, the government is taxing this group of people, which is an involuntary exchange. People, there's not a negotiation taking place. You just get a bill from the government. This is what you pay, right? You have no say so in the matter whatsoever. It's not like your car or any other bill that you negotiate. That causes productive factors to be withdrawn from the marketplace that would otherwise go to a higher and better use, and to be employed towards this arbitrary government aim. So I'm putting this as simply as I can. I know it's something to think about for a long time, but Mises would make the point, and makes the point. He elaborates on this for hundreds of pages in Human Action. All government action is a misallocation of capital.
Right.
Which is to say, it contradicts the democracy of the marketplace. Unemployment, by the way, he goes on to further say that institutional unemployment is all driven by legislation, regulation, all these non-consensual government actions. If you removed all of these obstructions from the marketplace, we would have no institutional unemployment. You'd have small cyclical amounts of unemployment, but the labor market would always clear. Supply and demand would always meet at some price, and people would be put to work. When you introduce things like a minimum wage, that creates unemployment. Okay, so and this is why it's so difficult, perhaps, for people to get their head around it, because we don't know any different. This has just been Austrian economic theory up until this point, until Bitcoin emerged. But now, for the first time in history, we have this property that can't be violated. So it actually puts this theory to a live market test. And so I don't think that the government can really do anything useful at all, actually, as hard as it is to believe. And you could say, people can point to live things like, oh, well, look over here where they've built homeless shelters to put these people that would have otherwise been sleeping on the streets. But this gets into the Bastiat aspect of the seen and the unseen, right? What you see is the government spending stolen proceeds to house homeless people. What you don't see is what they stole these proceeds from the marketplace. So you don't see what those proceeds would have done otherwise. You also don't see the fact that they probably contributed to that homelessness through their unemployment programs or through minimum wage. So,
right. So both opportunity costs and consequences are obfuscated. It's harder to see them.
And this is the thing about economics, right? It's an invisible science in a way, right? It's the youngest science. So I think,
if it's even a science, I mean, I'm an economist myself. And
if you read Austrian economics, there's no question that it's a deductive, a priori epistemological basis, right? It's not, Keynesian economists assume that we can do everything empirically, but we know that's not true. Mathematics is not empirical. Mathematics is a priori. How important is mathematics to the world?
So this is a very interesting subtopic that I think I'd like us to dig more into, because in Norway we have a parliamentary election this year, and like in the US, we have had a trend of parties or figures to the left being more skeptical or being more outspoken negatively against Bitcoin, which has raised the topic of why is that? Because in our conversation, in our context, the focus on Bitcoin is a lot on the solidarity aspect, the importance of free speech, the importance of a global, open, neutral form of money. And we should, in theory, make it very palpable for people on the left. But what you're describing is this inability of the state then to take, active action. And that might be, part of the explanation for why people on the left have a stronger backbone reflex against Bitcoin. I don't know. What do you think about this?
I think politics is a mass psychosis premised on the violability of property. I just wrote about this, but clearly politics, micropolitics between people, it's always there. We're always going to have little political agendas and conflicts and whatnot. But at scale, we really shouldn't give a shit about the political leanings of others, halfway around the world. The only reason we do is because politics is premised on a threat of force. And that threat of force is premised on the profitability of violence, which is premised on the confiscatability or violability of property. So,
well, okay, hold on. Let me disagree with you there. Could it not also be based on the integrity? So,
integrity of what?
You mentioned earlier on that you were shared a skepticism of the nation state, for instance, and a lot of these first principles that you've arrived at in order to construct a value system in which these things are wrong or these things are right. A lot of those first principles would have to exist within a cultural context, within a nation, and which has integrity of some sort. And it may be a nation, it may be an empire, it may simply just be a cultural sphere. But whatever it is, the reason that thing has survived among all the millions of various cultural spheres and concepts and cultures that have existed, the reason that one is the one that has survived to deliver you the first principles of thinking that property is inviolable has been defended by violence. And so integrity is the other side of that coin of, yes, of course, that violence can be used also to defraud or to take property, but it can also be used to protect the integrity of the very principles from which we derive our views on this. Do you follow that thought, or?
Yes, and there's a deep point there, actually. So Nietzsche has this thought that slavery is a necessary prerequisite to liberty, actually. You have to be honed and sharpened and trained under some oppression to actually be able to claim your freedom and value it and own it sufficiently. That's a possibility, right? Maybe what if, and I wrote about this a little bit in the Sovereignism series, that I think the violent emergence of the nation state and these economic enclaves of productivity that have grown to become the nation state, maybe this is kind of a bootstrapping process. In a computer bootstrapping process, what you do is you run a very simple program, like the simplest program imaginable. It's like these, 010 kind of program. And then that program essentially teaches or tells the computer to run this slightly more complex program, which then tells the computer to run a slightly more complex program, and so on and so forth. It iterates until you fully boot up the computer and it's running super complicated programs. In an economy, we have the specialization of knowledge, which is equivalent to the division of labor. But I think to protect the trade network so that it could actually create a division of labor, you needed very simple programs like don't kill, don't steal, right? And to create that bubble, you needed to have some monopoly force on killing and stealing. But there comes a point where that original program is basically totally irrelevant and useless once the computer is booted up. So what if my theory about this is just that perhaps we're going through kind of a boot up process, and that the principle of inviolable property, by the way, this has been at the basis of Western civilization for hundreds of years. It's been in the Magna Carta, it's been in the Declaration of Independence. The problem is not the principle. The principle makes all the sense in the world, right? I own myself, you own yourself, whatever we spend our time creating productively, we can trade with one another. There's no need to fight about it. The end. We create a lot of wealth in the process. The world gets better. The problem has always been the implementation. It's just been inviolable property scribbled on a constitution or a piece of paper that people later violate. Bitcoin takes that principle and permanently emblazons it in code. And an incentive design that protects it back to integrity, perfects its integrity, right? No one knows how to break the social contract of Bitcoin right now. And that's why it's so important. It's just taken these principles that we've been mulling over or bootstrapping for hundreds of years and now it's implemented it properly
Right.
in a way that we can't screw it up, hopefully.
So do you think this is something that was inevitable? Because to me, it sounds almost like like you describe a process that society has gone through, where we needed some force to enforce property rights because me as an individual couldn't specialize in what I'm best at, being kind of academically oriented, unless I had some kind of state monopoly of violence protecting my property, because otherwise I would have to kind of do push-ups every day and forge weapons. But now we kind of come to such a stage where kind of in a digital sphere, we're able to create something that is kind of lifted above the physical world, or?
Yeah, I very hesitant to ever use the word inevitable. You know, it's a very popular word in the Bitcoin universe. People just say it's inevitable. It's happening. It's over. I know the future, the end. This maybe gets into Bitcoin maximalism a bit. It's just like, I am the answer. This is the answer. This is the final answer. There are no more questions. I don't believe in that. I just, you know, I say that Bitcoin is the closest thing to an inevitability I've ever seen in my life in the economic space. You know, it's almost like, you know, we've put the design principles beyond our reach. So it's, you know, I think trying to change the core consensus protocol or the supply of Bitcoin is almost as futile as trying to change the orbit of the Earth, or, you know, the rotation of the sun or something like that. It's really profound. Was it inevitable that we came to this? I don't know. You know, like, I don't know. We know, you know, humans, I'll say this in the Stoic sense, that Marcus Aurelius says humans are designed to work together, right? We're like I think he says we're like the left and right hand, or the rows of the upper and lower teeth. We're designed to cooperate. And we know this, right? Like if you're fortunate to have a family, there is no better feeling in the world than taking care of that family, right? There's something transcendent about it. It is you operating in accordance with your deepest nature. And, you know, again, I think back to that, we create value through voluntary exchange. So there's something there, right? Like if you talk about value being this fundamental pursuit of economic activity, that's where it comes from. But we could have also just blown ourselves up last century, right? The Cold War could have gone the other way, and we could all be, you know, a memory, maybe even a memory if we're lucky at this point. So I don't want to say it's inevitable, but, you know, it feels like this is the direction humans are designed to go. Because as we move towards this principle, by the way, of inviolable property, we start to operate in a more harmonious, concerted fashion, right? We start to operate more like one organism in a way. So it's like kind of we're growing towards this interpersonal harmony. And it sounds kind of silly utopian, but if you look at history, we have actually been going that way.
I don't
right?
think
We've become more interdependent over time.
No, and I mean, if you think about how different cultures and concepts and political systems and economic models have competed and evolved and fought and inspired and mutated one another through the ages, and then you come to this moment of globalization where you need some kind of protocol that can be enforced without being in competition with an alternative protocol. You know, there's always been a nation next to you with another system that would be competing for supremacy against you. And here you suddenly find a language, which necessarily by definition must be necessary if the world is going to achieve a level of globalization that is necessary to scale on an interplanetary scale, for example. So sooner or later, a protocol like this would either have to exist or we would blow ourselves up,
Yes.
to use your word.
Yeah, it's the incorruptibility, right? To have an incorruptible social institution is the savior of humanity. And you know what? I say that sounds almost Christian, like a reference to Jesus or something. But let me lay out the path here. The Judeo-Christian substructure at the basis of our socioeconomic system today is the reason we have private property rights.
Mm-hmm.
It's the principle from which inviolable property was born. The Protestant Reformation was the spirit of capitalism, taught us to delay gratification and accumulate savings. So there's been this echo across history of the Savior, right? The Savior Jesus. And that principle is now in many ways perfected in Bitcoin. We actually have property that cannot be violated. So therefore we have a more sound substrate or scaffolding for the next leg up in civilization, right? How much did the world change when we figured out the joint stock company in Amsterdam? It was in the 1600s, I think. We figured out how to quantize capital and risk and share it and exchange it among large groups of people so that we could execute much larger projects. And this ushered in, all of the wealth creation we all benefit from in the world today. What's the next leg of that? What's the next evolutionary phase? Whatever it is, I think Bitcoin enables.
A super interesting thought. But then what threats do you see to Bitcoin actually fulfilling this role? Because I guess obviously it's not there yet. And I guess we probably hope that we can get there. But at least when I'm looking at this industry, one thing that is making me, I wouldn't say nervous, but I see a lot of centralization around service providers. I see credit creation happening at top of Bitcoin. I see interest rate accounts becoming extremely popular and they're kind of drawing people in. So both kind of what developments are you looking at when you're looking for adoption on this path to evaluate, is Bitcoin actually going to live up to what you hope here? But also, what threats do you see to Bitcoin that might co-opt it? So is there a risk that Bitcoin ends up in the vaults of some few hands and then becomes corrupted by centralized power?
Yeah, I think a lot of the products you mentioned, they do pose short-term risk, but I think a lot of it's noise. I think the market will sort out a lot of that. And this, again, is where I think I would diverge from the maximalist camp, and they just will tell you Bitcoin's inevitable. Doesn't matter what you say, doesn't matter what you do, et cetera, et cetera. And part of me tends to agree with that. It's so long as Bitcoin continues to exist, it's just imposing the economics of its protocol on reality. So you kind of have it forces you to play its game effectively. Mm-hmm. But I'll go back to Mises at the end of Human Action. He makes this great point that, when it comes to tools, a more useful tool will outcompete a less useful tool in the marketplace. So if there's a hammer that's better at driving nails, you can pretty much assume over a long time scale, people are going to adopt the more useful hammer. But he says that is not the case in the realm of ideologies. That human beings can be, once again, deceived into adopting false ideologies. And so even if the ideology is more useful, it doesn't necessarily mean it's going to win out in competition, right? It requires the buy-in of public opinion to actually succeed. And we saw a great test of this was US capitalism versus Soviet communism in the 20th century, right? Clearly, we know now communism is a inferior resource strategy compared to capitalism. Just cannot generate as much wealth, cannot perform economic calculation at all, frankly. So therefore it loses. But it had a lot of public buy-in, right? And it competed for many decades before we painfully and collectively realized that point. So my concern with Bitcoin is that although the protocol does seem to be very effective at forcing people to play its own game, I am concerned about how fast it happens and the lack of education and the lack of understanding in the world. So I think we can radically influence the configuration of Bitcoin's ascent, let's say, through education. Whereas if there were no education at all, say no one ever talked about Bitcoin at all, this would probably just end up in the hands of a very, very few people, right? The most disagreeable autodidact types that just really dig into history and, read, I guess. Whereas through education, we can enlighten others. Like, this is, property is the basis of civilization. This is an unbreakable property. This is the greatest civilizing force humans have ever had. And then all of a sudden you get mom and pops that may not have the proclivity to go and study for themselves as deeply, adopting Bitcoin so that they benefit in a way that they otherwise would not. So that's a concern. I don't know that it's directly necessarily a threat. So I don't think I'm answering your question precisely here. The greatest threat is the state. We know that. The state response is the greatest known unknown. How violent will they be? How severe will it be? How draconian, et cetera, et cetera. The sovereign individual makes the point that they're going to deal with people as they have historically dealt with other nation states. So you could expect some localized extortion, things like that. That's the known unknown. But I think we can significantly counteract that through education. And that's why, that was, again, that quote I mentioned earlier, that was a catalyst for me to kind of switch gears in my own career.
And I guess that's maybe the main, at least in my view, the main superpower of Bitcoin is how it has this X factor to it, which makes people want to educate others. Mm-hmm. So myself, I fell into the rabbit hole while studying economics. I ended up doing my master thesis on Bitcoin back in 2013, 2014. And ever since, I haven't been able to help myself, but try to talk to people, kind of share information, get them interested, tell them to take it seriously. And I don't know what it is, but there's something about it. It has this kind of really strong pull on people. I don't know if any of you two have kind of.
Well, I actually want to build on something Robert said earlier, if that's okay, because you were talking about this with the Christian ethos and how that sort of builds up this reality of private property as a first principle and so on in our part of the world. And one thing that's often overlooked about Christianity and the role of Jesus is that it's really about taking on the sins of others. And there are certain ideas that allow you to build enormous networks in which most participants in the network don't actually need to believe or fulfill the core tasks, as long as a sufficient number of people in it do. So when you and I choose to put the shopping cart back in the parking lot next to the supermarket, even nobody's looking and there's no reward and there's no consequence to not doing it and all this kind of stuff, we're taking on the sins of others, because through doing so, we're ensuring that the network of everyone benefits, right? And there's always going to be a minority in every network that does that, the people who educate about Bitcoin. That's why I'm connecting this. The people of us who sort of say that we don't actually need everyone to understand or read deeply about economics or philosophy or anything else. We will carry the sins of others, and then that will generate a better culture and ethical and societal response or structure. If it's okay, I actually want to share another thought, because I've been dying to share this one with you, Robert, because I've heard you mention the Protestant Reformation 3 times now in the last week in various podcasts and contexts. So I can sense that it's on your mind and you're clearly playing with this thought of what went on there. And I've been using this analogy that's up the same alley of how, you have this revolutionary communication tool through the printing press being invented, clearly analogous to the internet. We are living in a world with centralized institutions being responsible for all kinds of education, healthcare, most of public communication until recently, and so on. And everyone knows that it's corrupt, but most people are willing to defend it because they have literally no other world that they know. And then Martin Luther comes along and he pushes up these theses. And the key of this thesis, even though today we focus on, of course, how it leads to religious wars and the challenging of the authority of the Pope and all this kind of stuff, that's the noise. What it really does is to decentralize the relationship between human and God, where instead of having to go through the primary centralized force of the papacy, each individual can establish an individual relationship peer to peer with God, so to speak. And God here, of course, is an analogy for the economy, if you want, as an all-invasive, all-pervasive force in our lives. And then to think about where did that play out? Well, it didn't play out all that peacefully. There were definitely people who wanted to preserve the centralizing force of the papacy. There were definitely people who were willing to take up arms to defend it. Are we potentially going to face a counter-revolution, a backlash like this in the transition to a global, open, and neutral money, in the same way as we would with a global, open, and neutral protocol for defining your belief in God? Loose question, high thought, but I really wanted to share it with you, so I took the opportunity.
I think, first of all, I've been speaking to John Vervaeke recently, who is a brilliant cognitive scientist. We'll be releasing I think we're going to have, about 12 hours recorded together, and we're going to release a long form series. And we've been going very deep on this topic, this connection between money, religion, social institutions. And, he's just absolutely brilliant. One of the most compelling lecturers I've ever heard. He was on Peterson's podcast recently, which is where I discovered him. So I'd point people there. It's not released yet, but it will be out soon in a couple of weeks for a very deep dive on that particular question, but I'll try to speak to it in broad strokes. One of the terms I got from John is the concept of psychotechnologies. So we're all familiar with tools, right? Hammer, whatever. We could say technologies are the systematic use of tools effectively. And you can almost use them indistinguishably. The line's not clear between tool and technology. But there's another form of implement very important to humans, and those are psychotechnologies. These are non-corporeal implements of systemizing our own cognition. The most obvious and common are literacy, numeracy, right? We it's so deeply embedded in who we are. You can't even generate a thought without using the psychotechnology of literacy. I mean, try it. Like, you sort of can. I mean, you could visualize something perhaps, but literacy is just always there. It's pervasive in our cognitive landscape. And John, it just lays out, we didn't start with that, right? It took there's a long evolutionary path to get to literacy, and an even longer one to get to numeracy. And I've come to look at most human interactions as we're actually swapping these little modules of software back and forth, right? Like, you just asked me a question. So you assembled this thing in little blocks of literacy, and you threw it over to me. I'm going to spin it around, snap a few things on, throw it back to you. We're all passing it around. This is the dialogical process. And occasionally in that process, we innovate something radically new. We figure out some new idea, and we say, oh my goodness, this is a breakthrough, and we publish a paper about it, or we share it on a podcast. And then maybe, if it's useful and effective enough, that psychotechnology becomes widely disseminated, right? Other people adopt it. It has zero cost of reproduction, effectively, right? It's just an idea.
What's the difference between a psychotechnology and a moral quality? Like, for example, freedom of speech. Is freedom of speech a cultural technology, a psychotechnology, or an ethical principle?
Well, I would first, not to take the conversation sideways, but I would say freedom of speech is kind of this amorphous moral concept. And if you read Rothbard, he would say that it's really rooted in property at the end of the day. Like, if you come in my house shouting obscenities, I'm going to chase you out of my house, right? So you don't have freedom of speech per se. It's all about the property relationship. Yes. But to stay on this for a second. So this is an important way to think about it. Psychotechnologies are effectively the software we're running, right? The programs we're running. Literacy is a program. Numeracy is a program. Money is a very interesting one. It's kind of a hybrid. It's a psychotechnology to the extent we think in dollars, we perform economic calculation, we negotiate with one another. We're figuring out the tip for the restaurant bill. Like, it's embedded in our mental software, but it also has to have a bridge and rooting into thermodynamic reality. typically we've done this through a physical implementation like gold, right? Bitcoin does this through proof of work. So it's kind of a hybrid. It's a tech to the extent that it has a physical manifestation in the real world. It's a psychotech to the extent that we use it in our mental software.
And so, sorry to interrupt there, but I would actually add that money would need to have one more dimension, which is the emergence, which is a lot of psychotechnologies, and especially physical technologies, could exist in isolation. I could understand numbers and be on an island. Money on in a social
you're
context.
Right.
So there's also the social dimension where money is an emergent property that only exists. I mean, where I can consume a bread privately, money is always consumed socially.
Yes. So this gets me to the next point, actually. So it has this element of being a social construct, right? It's only useful if you're engaging in trade with someone or someone's. So that's the bridge right there. You can consider the social institutions we have in the world, religion, the nation state. They're kind of these composites of psychotechnologies. I mean, there's somewhat, and I'm not completely clear here, and Vivek and I discuss it at length. I think he argued that a social institution is more like an ecology of heuristics, behaviors, patterns of action, and psychotechnologies, all kind of commingled together. But in that lens, I would say money is almost like a protocol for a lot of that, because even if you're going to have a religious institution, it's going to be some of the functions of that institution will be premised on the protocol of money, right? The indulgences and, the donations, and it's still social institutions
of value.
Yeah, they're finding but they need money to function in the world, because at the end of the day, you're coordinating humans, so you're going to need to use money at some point, especially as the scale grows. So long short is, if we look at that and say, okay, psychotechnologies are human software, human social institutions are at least componentized by psychotechnologies. I'm not going to say it's just a psychotechnology, but that's a key part of it. Money being one of the main ones, right? Especially once you get beyond 150 people, the Dunbar number, you need money, essentially, in any endeavor. When we look at the medieval church, what happened? We commonly say it was disrupted by the printing press. Why? Well, the printing press it was a technology that led to the accelerated and wider proliferation of psychotechnologies, of literacy, of numeracy, which, to your point, all of a sudden made the church much less relevant as being this intermediary between an illiterate population and the Word of God. People they had installed literacy themselves. They could access the Word of God directly. It created a market for heresy and critical thinking, by the way, because also people can read, right? They can think for themselves. They can ask questions. The average level of intelligence went way up. The church lost its monopoly on book production and therefore flows of knowledge via the scriptoria, right? It was no longer relevant to have monks copy books by hand for dozens of years. You could just print them, right? So there's an economic upgrade that led to a psychotechnological upgrade. And this led to the collapse of the church, right? So it was the way I've started to look at this is they're like software updates, right? We had a widespread human software update. And in that process, we were throwing off the yoke of an institution that was formerly useful. So you could think of religion as kind of like this canopy under which people gathered. And a lot of it was to lower transaction costs among people, not just financial transaction costs, but just interaction, right?
Yep.
We're all going hunting, and I know we're all Christian, and we all go to church together, and we know each other's family, and we believe the same moral code. I can trust you to watch my back, right? I don't need to think about what you're doing. It's a cognitive expedient, effectively, which is another way to say that it lowers the cost of trust. Religion lowers the cost of trust among people, and that's how it helps them cohere. Well, money offers a similar function, right? Money is a trust minimized asset of exchange, so it lowers the cost of trust. And it also lets you engage. It's even larger than religion in some ways, because when you hand me gold for my apples, I don't care what religion you are. I don't care where you're from. I don't care who you are. I don't have to know you. I don't ever have to have even met you once. If you hand me physical gold and I've assayed it and verified it, this protocol tells me that is, I don't need to trust you, right? You have verified the value
You're out of my
exchange.
life. Yeah.
Yeah. So I'm throwing a lot at you, but those are the kind of topics that we're going down the rabbit hole with Vervaeke. And there's something deep there. There's this deep connection between psychotechnologies and institutions.
Super interesting. Really looking forward to check that out
same.
once it gets published. I think I just want to touch on the trust element here, because I view money very much as a substitute for trust. I would view it such that when you can have trust, there is actually no need for money. You don't use money within a firm. You don't use money within a family. But especially for cross-border payments, or especially if you can interact with someone kind of on the internet where you don't know if you're interacting with a dog, where you cannot have trust, where you don't have repeated trade, or you don't know who the counterparty is over time, then you need a substitute. So without spending too much time on it, but in my thesis looking at Bitcoin, what I did was I try to apply the different schools of thought from economics, including the Austrian, to try to shed light on Bitcoin. And the framework I came up with, or my kind of digest of that, was to look at actually different monies intermediate different social relationships. So in a very stylized fashion, I viewed it such that in a firm, you don't use money, you use kind of memory. Between companies in the same value chain that interact often, they will typically rely on credit because they kind of have a trust relationship. Then banks, as a type of institution that emerges that are kind of taking the credit from a larger set of entities and using that to back their own credit, which then can circulate wider, highly dependent on kind of the rule of law and enforcement of credit. Then kind of fiat money, where kind of the violence monopoly and kind of the nation states kind of power gives them the ability to enforce trust in their money. And then for relations where you cannot trust at all, you have to rely on a commodity.
What if we continue on having that positive note? Because until we reach the corporate level of those kind of trust circles, we keep seeing it as a positive thing. What if which doesn't follow us naturally as Bitcoin people, but what if for a moment we think about the central bank as possibly having emerged in the same way as the bank emerges to collect credit and thus make cooperation easier between firms? The nation state's central bank also emerges to coordinate trust between various credit unions that otherwise could not have had a payment rail between them. And that, again, can be then extended to Bitcoin, that in a world in which you cannot have a currency that's tied to a particular jurisdiction because of the lack of trust that participants might feel in the jurisdiction, then that jurisdiction-free currency is the way to create a trust circle on a global scale. Sorry, just building on your thought there. I thought that was an interesting one.
Yeah, I think we're back to that aspect of money being a cognitive expedient, right? Because trust is expensive. It's expensive to build trust between two people. It takes time and iterations and all these things. But again, if you just have money, right, it's an expedient. You can basically, this is the ethos of Bitcoin. Don't trust, verify. If I hand you a bearer asset, you've basically verified, right? That's verification that you're taking possession of that money. I've rendered value to you. You can then render a service or whatever the agreement is unto me. So, again, that's kind of one of the institutional angles on money, is that it's, a way of, Szabo calls this trust minimization. We could say lowering transaction cost, if we consider trust as a transaction cost for two people to engage in any form of reciprocal behavior. You need to establish trust, but if you can minimize the need to establish trust through verification, then you've effectively lowered the transaction cost. And this gets into the purpose of the firm. The firm is another expedient for lowering transaction costs, right? When it comes to negotiating long-term contracts, or even having exchange and transaction costs between people, the firm serves that purpose largely. So that, I think that too speaks to where we're headed in the digital age, that through these, I've never met you guys, right? We're just jumping on a podcast talking here. The cost of trust has been lowered just by virtue of the media that's available to us. If you now then layer onto that, we have this digital gold, Bitcoin, that if there was a value exchange going on here, we could lower the cost of trust even further. I think this starts to point to the effect the digital age will have on the firm itself. That we're, again, Sovereign Individual talks about this, where it makes a point that we'll move towards an economic model that looks much more like a loosely coupled group of free agents coalescing around different projects and then separating again. And they analogize this to the movie industry, actually, where a project comes up, actors and producers and riggers and all the different roles that go into making a movie coalesce together. They make a movie for a few months, they all get paid, and then they break apart again into this kind of nebulous pattern until another project comes along. And then different individuals will coalesce around a different project and create another movie. So I think we go from a world based on the new possibilities of these media tools, which money is a media tool as well, right? It's a media of exchange, where people don't have jobs, but jobs have people, right? The job itself becomes kind of the centerpiece, and people come to the job to execute it and satisfy its demands, and then they move on to the next. And so in that scope, just to tie this back into the central bank, again, the central bank was so we had a great tool for final settlement with gold, again, right? I hand you gold, trust minimized, verification heavy. It's not very portable. So we end up with to have portable money on a gold standard, we end up with a lot of deferred settlement systems. So this is credit systems, right? Hey, I'll pay you later, this or that. When the portability of money has been increased so high, and then you have this peer-to-peer media, the possibilities of peer-to-peer media, what's the relevance of a large centralized institution enabling deferred settlement across an economic network? It's just not there anymore, right? And so there's a number of ways to think of this. I just think of it as Bitcoin is disrupting gold. Gold is the base layer protocol. Again, if we're talking about psychotechnology and social institutions, gold is one of the most important hybrid psychotechnologies or social institution protocols in the world. I think it is the most important in the world. That's why the dominant institution in the world hoards gold, right? They have 20% of the total gold supply. I simply think of Bitcoin as disruptive to that base layer. So maybe another way to say this is money is a protocol, and all the social institutions on top of it are applications, right? So we're swapping out the protocol layer, right, which means all the applications will change as a result. And the one that stands to lose the most is the central bank, which feeds the one that stands to lose the second most, which is the nation state.
So this is a very interesting thought. So what you're arguing in many ways is that money, at least as a base layer, forms society, kind of based on the types of money available to us. And that the limits of portability for gold, for instance, made us end up with credit money, which was then co-opted. I guess it's a very interesting thought, and I need to give it way more time than what I've been able to do right now. I'm coming at it from a kind of historical materialism perspective, where I look very much at the mode of production as the driver of the type of institutions we get in society. So, for instance, when we went from a feudal society into an industrial society, driven by kind of the steam engine and the kind of industrial revolution, the way I see it, a lot of the institutions we have today, and the central banks being a part of that, is very much formed by, in my view, the mode of production of an industrial society. large factories, and how kind of society was organized around that. And the way I see it, it's not only that we have been kind of discovering or giving a new form of money, but in parallel, like so in my view, if you had Bitcoin, but in the kind of in an industrial society, it wouldn't be as potent as Bitcoin in an kind of digital information society, where we can have these forms of, as you said, kind of jobs having people rather than people having jobs, or where you can have these kind of types of fluent ways to get together. So yeah,
I agree with you, and I actually think we might sort of be speaking to somewhat the same phenomenon here, because again, back to that bootstrapping process, we would say that an economy becomes more sophisticated the more capital stock it has per capita, right? So what's a simple way to put it? Okay, so when the agricultural age begins, which is the beginning of the creation of savings, the deferment of consumption, right? The very, it's proto-capitalism, effectively. You're planting seeds. You're not eating the seeds, you're planting the seeds for future harvest.
You're lowering the time preference significantly.
You're beginning the process of civilization with the advent of the agricultural age. The very dawn of the agricultural age, 100% of the labor force is being allocated to growing food, right? Now you could argue, okay, people needed to make tools for the farmers, fair enough, but the point is all of the labor and specialization was going almost directly, maybe slightly indirectly, into food production, right? At the opposite end of that spectrum, you could look at today, where we have accumulated this capital stock over centuries and centuries of delayed consumption and capital accumulation. Today, we have sub 5% of the global population being allocated towards food production to feed the other 95%, right? That's only possible because we have the amplification of labor in that capital stock, right? Very few people are able to disproportionately feed the majority because of capital, effectively. So there's kind of that bootstrapping process involved, right? Like we're saying, okay, we're in this information society. Well, how are we in this information society? It's because we already accumulated all this capital to satisfy the other needs. We can have more roundabout production processes today and focus on higher and different aims because we've satisfied all these wants into the future by accumulating capital historically.
Right. This is the master period, basically, in the capital structure.
Yeah. So you're progressing. I think to your point, you're saying that it's the mode of production that shapes the utility of money in a way. And I'd say there's kind of a reciprocity there. I don't think it's just one way. But
yeah,
I would argue,
I think there's kind of a kind of bidirectional relationship.
Yes.
Obviously, a firm is hierarchical in its structure, and you could make the argument that that a firm is similar to a government in that it can own some material assets and use that to exert power over its employees. It seems that we are transitioning, or at least parts of the world are transitioning to a situation where the main asset is the human capital, which is embodied in me, and I can I can send that anywhere, and especially over internet, I can send it to anywhere in the world instantaneously.
Yes.
So that we are less dependent on the hierarchical structure of a firm.
Correct.
And then a state emerging on top of a a hierarchy, like self-similarity. If you have hierarchical structure at the very bottom layer, it's very likely that you'll get a hierarchical structure all the way.
Yeah, it's fractal, right?
Yeah.
It's and so the other piece to that is like not only are we accumulating capital stock, but a lot of the output of the 20th century industrial society has become significantly commodified through that process. So the prices are much lower. Everything's cheaper on a commodity basis. I know once you mix in central banking and price distortion, it gets messy. But in terms of the amount of human time necessary to produce a barrel of oil has gone down tremendously over the past 500 years, let's say. That means more value is being created higher up the production stack, if you will, right? If you have agriculture at the base, industrial in the middle, and say digital at the top, more value is being created and captured in that top layer. So I would agree with you. That makes Bitcoin much more relevant and useful in that type of world versus mid 20th century.
Yes,
I know we had Jeff Booth as one of our first guests on the main channel that we're running, and he was making this point very eloquently. I think you've also had a couple of very interesting conversations with him. That's half of the way that I discovered your mind, to my great pleasure. And he was talking about this, how innovation and time and proper capital allocation should drive down prices and act as a deflationary force on everything. And the only reason we're not actually seeing things becoming basically for free is because it's prevented by governments who have a mandate to maintain price stability.
Yes.
Yeah.
I mean, that's I would, again, if you just take a step back and think about it, right? Like, why are we trading? What is the economy? What's the point? What does the word economy mean? It means to create greater results with less or the same effort. So to do more in the same or less time. Yeah. And by the way, this is a deep point too. Capital is time. There's two ways to think about this. One, you're investing your time in creating this capital, right, that effectively acts as a buffer against risk or uncertainty. So if I've got, a basement full of food, that is capital. If the zombie apocalypse strikes, then okay, I'm buffered against that risk by virtue of my basement full of food, right? So capital is a buffer against risk, but it's a form of frozen time, if you will. The other way to think about this, it's equal, is that you dump a bunch of doctors on a deserted island, right? They have all the knowledge in the world, all the medical knowledge in the world in their mind. Does that mean they can then perform brain surgery on you on that island? No. They need to accumulate the capital necessary to express that knowledge in a useful way. So absent the capital, they have to spend the time to accumulate it. So capital is a mechanism that puts you nearer in time to your aim, right? If my aim is to go from New York to Los Angeles, if I'm walking, I'm a long ways in time from my goal. If I'm in a car, I'm a little closer, right? A form of capital is amplifying my position in time towards my aim. If I'm in a plane, I'm even closer. So this is a very deep point, and that is why we're trading and innovating, is to do things more cheaply. Costs should be declining. That's the entire point of an economic system. Yet we have a monetary system laid on top of it that is trying to do the exact opposite, right? It is a debt-based monetary system. And as a debt-based monetary system, it is serving the interest of the largest debtors in the room, which are governments, right? And the inflation that they create by expanding the money supply is eroding the real debt burdens of governments over time. And it's externalizing this cost onto society. So it's a slow motion default of the currency. That's what inflation is. And that one last point there is that, talking about the biblical side of it again, the Greek word, I think it's Greek, maybe Hebrew, that's translated in the Bible for debt. Sins and forgiveness, they're often referred to as, Jesus redeeming us of our sins. They talk about the wages of sin are death, and the debt that we incur through sin. All of this, the word etymologically debt in the Bible, very closely related to deception. They share a common root. So I don't think it's any coincidence or any stretch, or it's not even an analogy to talk about debt-based monies as deceptive, right? It's a lie. So this is why I say fiat currency is a living lie. It's papering over the consequences of capitalism. It prevents the market system from adapting to changes. It distorts prices. It's common to say in markets that price is truth, effectively. So when price discovery is not occurring, what do you have? If price is truth and price discovery does not exist, then what do you have? You have a lie. And we're all orienting ourselves to that lie. So that's what's screwing up the world, in my opinion.
So I'm going to take that opportunity to, because time is running a little bit out on us, and we've spent a lot of time now delving into the structure of things, the ethics of things, the principles of things. But I feel like this is a good entry into how does it affect us as people. And I thought this was an incredibly interesting podcast you did with Peterson and also with Gigi and Wallace. And it was really interesting because of the focus you had on the effect of these systems on the individual and this mode of operandi, and of course, what priorities we have in our life, how we even structure time. So yeah, would you like to share some of your thoughts on that? Because, okay, so we have a debt-based system. It's based on deception. How does that fuck with us all? Forgive my French.
Yeah, very simply, just through the Austrian lens, you could just say that when your money does not hold its value over time, which is to say you're suffering from inflation, you're a victim from inflation, the nation state or central bank is externalizing the cost of their theft onto you. That raises your time preference, which is to say it lowers, this is commonly tricky for people, but higher time preference means you have a shorter term outlook, lower time preference, longer term outlook. When your money can't hold value over time, of course you're going to be more short-term oriented, right? My money is on fire. I'm going to spend it as fast as I can, whatever, consume it, whatever, spend it, because otherwise it's going to go up in flames.
Right.
Further, as we just mentioned earlier, you're incentivized by virtue of inflation to take on debt. Because if I borrow $50,000 and the value of money is going down 10% a year, and I have a 10-year term, I'm going to pay you back, $10,000 in today's purchasing power. So inflation incentivizes debt accumulation too. And what did we just say? Debt and deception, they're one and the same, right? You're borrowing from the future in a way. And this starts to unravel the entire direction of civilization, which is this accumulation of capital over time that amplifies our efforts and allows us to accomplish greater results with less effort. Eventually, when you get deep enough into this debt game, you start consuming capital. You start eating your own seed, if you will. And this is de-civilizing. This is completely antithetical to the purpose of trading and capitalism. So, if you've studied time preference, I think that's the easiest way to look at it. I go deeper in some of my writings in Masters and Slaves of Money. I share the parable of the winemaker, which I lifted from Gary North. And I think it just forces market actors to weigh their financial well-being against their moral integrity, because you're just, you're just forced to be more short-term. So you'll do whatever you need, whatever you can do to survive in the short term. So it's decivilizing overall.
But on that,
Decivilizing, that's a good word.
But do you think it's possible to actually get away from debt-based money? I guess being kind of tapping into linguistic, if you go to Germany, Geld means debt. And
I'm sorry, what is it?
Geld, the German word for money, is
okay, yeah.
more or less the same as that. And we already see a massive expansion of credit based on Bitcoin. We see it in the derivatives market. We see it on the lending platforms, extending loans collateralized with Bitcoin. And we see this kind of overstructure. And then the question is, of course, you can make the argument that actually you cannot inflate Bitcoin. So the actors will have to realize that if they are over-leveraged or if they are lending out too much, they'll have to pay the price, not having that money repaid. But also kind of throughout history, I mean, going back to Babylonia, where you have jubilees every fourth year, debt was written down. So in many ways, there are two ways to write down debt. One is to actually use the power of the judiciary system to kind of cancel debt. The other is to inflate it away. on the Bitcoin standard, or in the future, if Bitcoin really catches on and really becomes the dominant form of money, do you see a risk of kind of governments or kind of there will be some centralizations of power, and especially around courts and kind of enforcing that will, instead of seeing inflation as the cure, that they will, like, the short-termism will still be there, and that the capture that if you have a large share of your population indebted.
Can't you do fractional reserve banking, but with Bitcoin as the fractions?
Yeah. It's already happening.
So let's go back to, well, first of all, to your point, what's happening now? It's not black or white, right? It's not like we have fiat standard or Bitcoin standard. These two things are converging. And I would argue that there's a number of factors here. One, if you think Bitcoin is going up 10x, you don't want to sell the damn thing. You want to borrow against it, right? So that's one factor. Second factor is we are currently enmeshed in fiat currency addiction, right? It's, again, I think it influences the way we think. We're on a debt-based monetary system. Everyone's up to their eyeballs in debt because of the incentives associated with it. We've been doing this for at least 50 years, hardcore. It's really further back than that if you really start to peel back the layers on fractional reserve banking. So I think the short term that we're seeing with Bitcoin and the explosion of these credit markets and debt markets, I don't think that reflects what the long term will look like. Because again, we're talking about swapping out the base layer protocol, which again, if we go back to gold, why do we have so much debt accumulated on top of gold? Because gold is not portable, right? You can't perform high frequency final settlement in a global society with gold. Could you imagine? Like, what, we're going to ship gold around the world 24/7, just 747s of gold flying around all the time between different vaults?
Sure. But you will still have institutions that will have accumulated a significant amount. Or maybe I will sound like an idiot now, so arrest me where I'm wrong. But you will have institutions accumulating a significant amount of Bitcoin, and they will surely use that leverage to expand their own credit in whatever investments they make without ever getting rid of their Bitcoin, just using that as a guarantee of whatever loans they do. Of course, using layer 2 and layer 3 on top of Bitcoin, you can also create derivatives that they should, create air Bitcoins if you want, the promise of a future delivery of something. But will you not be able to create a sort of at least you won't have a 19th century kind of fiat thing, obviously, but you will have a 19th century style gold standard currency on top of this?
The answer is yes. You will create all the same things we have on top of gold today. They'll all be attempted. But what will the market do? Right? Bitcoin is hyper portable. Right? Why would I take your promise or your derivative or your paper Bitcoin and just hold it forever and say, oh yeah, this is as good as Bitcoin? No, what am I going to do? If I'm a rational market actor, I will demand final settlement, which is available 24/7 globally within an hour, right?
Unless you get
was not possible with gold, could not be done with gold. Therefore, the derivatives market is enabled to grow much larger. Gold necessitates deferred settlement because it lacks portability. Bitcoin enables high frequency final settlement. This is like the truth, right? Every time you have final settlement, again, it's no trust, it's verification. So we have like a system that a global monetary system that's self-auditing every 10 minutes. Versus gold.
I like the idea that this obviously is possible. There's obviously a technological possibility, but in terms of action and what people will actually do, I don't see people necessarily doing final settlement all the time. I see them easily.
The people that don't will be wiped out.
Okay.
Pure and simple.
The
Darwinian process will carry itself out to the people that do not demand final settlement and hold their own keys will be eliminated from the marketplace. And through that elimination, they will teach others, right? This is the individual fragility contributing to the collective anti-fragility. People will learn from the mistakes and failures of others and know I need to demand final settlement. I have to hold my own keys. That's what changes this.
But here's a very interesting result from a lot of kind of complex systems analytics is that you typically have equilibrium outcomes that are never reached, where you kind of can see fluctuation around it. That could be cobweb fluctuations in the economy, where pigs are expensive. All the farmers go home, breed pigs. There's a ton of pigs next year. Pigs are cheap, and you kind of have it back and forth. And on credit expansion, I think you could easily see kind of a Minskian type of situation where a period of stability would kind of make it where people are able and companies are able to repay their debt. Will make it look as if the debt is less risky, which makes people's willingness to hold that debt higher. You hold it instead of final settlement because you get some interest. But as kind of credit expands during stability, more and more risky debts looks safer and safer. And there might be an outcome here where we don't settle at some kind of equilibrium, but where we kind of fluctuate and kind of keep having financial crises due to the inherent instability, kind of stability being destabilizing.
Well, I would say that I don't believe in equilibrium at all, actually, in markets, right? Markets are, again, back to Mises, the evenly rotating economy, right? This imaginary construction that's never attained. That's market equilibrium. The market's always working towards it, but it can never achieve it because of uncertainty.
About tending towards equilibrium, but nothing more.
Exactly. It's asymptotic at best. I don't think there's I'm not proclaiming there's an equilibrium state here. And I also don't think this is the end of debt or credit, but we go from a world that's 350% global debt to GDP to a world that's 10, maybe 20% global debt to GDP, right? If the debt is not expected as debt originally is intended to be, if it's not expected to outperform the investment, right? You're borrowing, putting the capital into an investment. If that investment is not expected to outperform the hurdle rate of the hard money appreciation, which tends to go in tandem with global productivity growth, maybe Bitcoin's growing 3% per year at maturity. If you can't borrow funds and put them into a project that's expected to return over 3% plus the cost of the borrow, you're not going to borrow. So it sharpens the intelligence of capital allocation. Whereas again, today we're in the exact opposite, right? It's just flooded with artificial liquidity. Invest in whatever in the F is not being inflated, right? You see this explosion in unicorn stocks. It contributes to the boom of Bitcoin. You see market actors getting forced into riskier and riskier investments, right? You're going from government bonds, which again, government bonds are yielding what? Negative to zero. What are people going to do? What are real savers going to do? Low risk market actors, low risk appetite market actors. They go into equities. Equities get a huge monetary premium. They get overvalued. What do? They go into junk bonds. Junk bonds get bid up. What do? They go into riskier equities, so on and so forth. So it's a hydraulic pressure forcing people into riskier investments because there's debt embedded in the money. When you rip the debt and the inflation out of the money, it flips market actor behavior back towards intelligent capital allocation and conservatism. That's my opinion.
So two questions on top of that will take us in a slightly different direction that I think we need to touch on. One is just what will happen to the dollar as a result of this. I think I'm going to leave that to that. What's the future of the dollar, Robert?
I spoke about this publicly. I think that we expanded the dollar supply almost 40% in the past 18 months. I say almost, I'm being generous. I think it's actually over 40%. Yeah. When you get to, so call it 3 or 4% per month, roughly. When you get to 50% per month, that is hyperinflation, right? There's a law written about historically called the law of accelerating issuance and depreciation. So the more dollars you produce, you get a diminishing economic return on each dollar in a debt-based system. So think of it like stimulant is the commonly used analogy. Your first, let's use
the
alcohol.
First line of Coke is a lot higher, stronger than the eighth line.
Your first line of Coke or your first beer, you get this big burst of energy, economic activity is stimulated, starts to die off, you go back for a second one. Well, it feels about 50% as good as the first one. And then you have the third one, feels about as 50% as good as the fourth one, so on and so forth. Before what? You end up in rehab or on a hospital bed. The organism fails. This is also true of fiat currency, right? It has a diminishing economic impact with each round of easing. So we're at 40%, call it 3 or 4% per month today. I expect that rate to
per annum.
No, 40% per annum.
Yeah,
which is 3 or 4% per month,
right?
Roughly.
Yep.
50% per month is hyperinflation. Okay, so that's how far along we are. Sounds like a long ways, but when you look at these rates of change in monetary systems historically, when they get into this territory of 3 or 4% per month, they tend to quadruple every few years. Yeah. So we're talking about going from 3 or 4% per month now to 15, 16% per month in the next 4 or 5 years. And then it would quadruple again. And then you're over 50% per month and in hyperinflation territory. So I think the US dollar is hyperinflated into worthlessness. And I'm on record with this prediction by the year 2035. Also, by that time,
what if they pull a 1975 kind of move and say that, okay, we're going to administer the bitter medicine and we're going to do the thing that is going to cause a bunch of bankruptcies and economic depression for a short while, and we're going to increase interest rates?
I just don't think there is a social tolerance for that now that we're in the stage of helicopter money, right? People in the U.S. are already demanding $2,000 per month.
Right.
Already. It's already here. It's not like maybe it's going to happen. It's here.
People experienced it. They lived it.
Yes. And the inflation hasn't even set in yet. So when inflation sets in, what happens? Well, the 2,000 is not enough. I need 4,000. I need 6,000. I need 8,000. I need 50,000, right? Inflation, this is not a joke at all. It rips society apart. And if you haven't studied this historically, then you have no idea what's coming. It's going to be brutal. So I think by the year 2035, the US dollar is hyperinflated into worthlessness. That's also the year by which 99% of the Bitcoin will have been mined. Yeah. So I think Bitcoin will have consumed a significant amount of the purchasing power in the world and will, in my opinion, be the dominant monetary system in the world by the year 2035.
So that is a perfect time to ask you. Recently, in the last couple of days, we have, in a sense, seen that Bitcoin is already the dominant monetary system in the world. With this massive pullout from Afghanistan, we are seeing people fleeing for their lives. We're seeing our friends, our co-workers, people who contributed to our mission there in a desperate situation. And a lot of them are leaving the country with none of their valuables. What does this situation tell us about the future of Bitcoin and conflict?
Well, you know what is extra despicable about this, but it speaks to the realities that we're living through today, is that not only did President Biden retreat from Afghanistan, but he also hired 80,000 new IRS agents. So what do these two things tell you? Cutting cost, increasing revenue. What's wrong with a nation state? They're broke. Been broke for a long time, right? But we've had the ability to monetize our insolvency and externalize its costs onto people through inflation. That window of opportunity is closing, right? This is the sovereign individual thesis. Once there is an alternative for people to opt out into a money that does not steal from them, it is an exit option from economic tyranny. Few people understand what it is today, but more and more, the more dollars they print, right? The more inflation they create, the more demand is being created for inflation and coercion resistant money. And that is Bitcoin. So it's early, but I think all indications point towards the insolvency and bankruptcy of the nation state model. And this is why I'm beating this drum so hard. I just can't see around the economics of it. There is no conceivable way for the revenue levels to satisfy the indebtedness of the nation state as it is. Then you further take into account the revenues are being suppressed by the existence of Bitcoin, right? If we just look at 2020 in the US, we printed $4 trillion. We had $4 trillion in direct tax receipts. So 50% of the government revenue is inflation. 50% of the government revenue is taxation. I hate to use the word revenue for that because revenue tends to imply a consensual exchange. This is not. This is theft, but it is what it is. The government's premised on theft. Bitcoin closes half of that revenue model immediately, right? The more you inflate, people are going to be like, the price of Bitcoin will just be exploding, right? It's this irrepressible barometer of inflation. So everything's getting more expensive. I can't make ends meet. The price of Bitcoin is going ballistic. People are going to wake up and there's no better mechanism for directing attention than a market price, right? So when the price of all the inputs to your life are exploding and the only asset that's appreciating wildly is Bitcoin, you're going to pay attention. So half of the revenue collapses of the nation state. They're left with just direct taxation. That alone would bankrupt the nation state at this point, right? The US, we have over 100% debt to GDP. That alone bankrupts them. But now you add into the fact too that people are now storing their wealth in the hardest to tax asset in human history. All right. So I just can't see how the nation state does not disintegrate in this movement. It's not going to be a clean break. There's going to be the other element of this that I think gets kind of muddy is we'll probably end up with something like a white market versus black market Bitcoin. All right. There'll be Bitcoin that's KYC'd and it's on a regulated exchange and, maybe it's linked to your CBDC wallet or whatever, and you can spend it on approved purchases. That will trade at a certain rate in that jurisdictional market, whereas black market Bitcoin, which is liberated from all of that and can cross jurisdictions, will probably trade at a premium. So
yeah, because that's an interesting question we got from our audience before the episode, which was about fungibility. How will that affect the fungibility aspect of Bitcoin? And yeah,
it's a great question. Bitcoin is fungible if you use it right now, but it's not fungible if you are just buying it on a KYC exchange and holding it, especially if you're holding it on an exchange. It's not even Bitcoin, really. It's an IOU. So I think just like we create more demand for inflation resistant money, the more we inflate the money supply. The other piece to this is you're going to see nation states, which we're already seeing, engaging in more extreme forms of censorship, right? Deplatforming, control, propaganda, all of these things. It's going to create more demand for censorship resistance, frankly. So I think that, and this is similar to when the printing press emerged for the church, they thought it was a joke initially, just like most governments thought Bitcoin was a joke initially. Mm-hmm. Once they realized it was a threat, the church tried to suppress the printing press. And what happened?
Right.
Well, people started printing books on how to build a printing press. And
so there's actually a funny
escalated. So I think the similar case will hold here, where as you try to suppress encryption technology or censor people, right? Like when Trump was kicked off of Twitter, 3 or 4 months ago, what happened the following week? 25 million people signed up for Telegram, encrypted messaging app. So the harder you squeeze, right? The harder the totalitarian tries to grip and control people or human nature, which is like water, right? It just flows to where it's treated best. The more rapidly people will slip between the totalitarians' fingers, frankly, and into the digital high seas, as I call them in sovereignism. So it's going to be, it's a very uncertain, choppy transition, but I feel increasingly convicted by the day that this thesis is unfolding before our eyes.
So it's very interesting thoughts there. Looking kind of way into the future, say like 2035 or later, do you think it's likely that there will be kind of one global currency, and that being Bitcoin? Or do you think that there will be a lot of many currencies? So maybe the dollar goes into hyperinflation, but will that bring with it all fiat currencies? So we end up with kind of a global Bitcoin standard, or will
how Bitcoin maxi are you?
So 2035, I think US dollars collapsed. By that point, I would think the dollar would be the last to go, by the way, of fiat currencies. So when I say the US dollar is hyperinflated, I think most currencies, the possible exception of the Chinese yuan, will have hyperinflated. So in the intervening years, I think a lot of the weaker national currencies will actually dollarize or even Bitcoinize over time. When their currency collapses, people will try to get into the best money they can, which will either be dollars or Bitcoin, depending on how the narrative's unfolding. I would say increasingly Bitcoin towards the end. And I think we end up with US Fed coin, Chinese, PBOC coin, so Central Bank of China coin, corporate coin of some kind, which is probably a basket of the first two and or other currencies and or Bitcoin, and then Bitcoin as free market money. I don't know how long that takes. Maybe that's a 10-year process to get to that point. And then I think, and it's possible that US and China could just hold on to these little economic fiefdoms, right? Because again, the sovereign individual talks about the new luddites. So there's going to be a group of people that just resist change and just don't understand what's happening. And, I think it says the line that only the most stupid or patriotic will stay subservient to fiat currency effectively. So maybe the US and China persist in some limited form beyond that. But I think most of the economic activity of the world will start to be denominated in Bitcoin. And I think most of the monetary premium and purchasing power of the world will be stored in Bitcoin. I am careful with the word currency. So currency has a couple of meanings. One would be the most widely used medium of exchange, which I think Bitcoin, on Lightning Network or similar will be that. But the second meaning of currency, people tend to think it's the form of money governments impose, right? Whatever the central bank imposes on people as legal tender or otherwise is currency. I don't think Bitcoin will ever be that. I think Bitcoin dissolves the nation state, dissolves monopolies on money. So that's the one condition I'd put out there.
Well, that's an excellent moment to mention. What does that then mean for the nation state that in just 2 weeks is going to introduce Bitcoin as legal tender?
El Salvador.
It's a really interesting situation, right? I mean, Bitcoin won't recognize that a nation has gone to Bitcoin. Bitcoin just sees the nodes. Ukulele is nobody special to Bitcoin. But yet this is treated as a very special moment. What is the actual significance of this moment? Are we overestimating it? Are we underestimating it?
No, I think it is quite a significant event because we're seeing a penetration of Bitcoin into the highest institutional layer of human society. And it's creating a precedent for others, right? A pattern for others to emulate. And, there's a number of kind of murky areas here where people, I've been talking to Max Hillebrand recently for another long series, and I think he's a little bit skeptical on the compulsive aspect of it, where these merchants are being forced to adopt or forced to accept Bitcoin. I don't think they're forced to hold it. They can convert it into whatever currency they choose.
Yeah.
I tend to agree. I don't like compulsion or coercion in any form, but it does seem to be a little bit benign in this particular circumstance. But so there's a number of areas that are kind of murky that I think this will sort out, as we see a nation state start to adopt it. And then it will be fascinating to see what economic impact it actually has, right? Does it spur an increase in economic activity or economic density in these areas for a very economically blighted country? There's not a lot going on in El Salvador right now. So if it makes significant socioeconomic strides, then there's a possibility it could be, a phenomenal case study for Bitcoin. It's like, just look, people start to cite it. Look what happened in El Salvador. They had Bitcoin and their GDP popped 10, 20%, whatever the positive story is. But, alternatively, they could also go the other way. There's a lot of risk too. Bitcoin's radically new. It requires radical responsibility. There's a lot of crime in El Salvador. So I don't know what we're going to see come out of there, but I do think it is a significant historic event for Bitcoin.
All right. I obviously entirely agree. It's a very exciting moment, but perhaps the actual consequences will be less in terms of legal and economic terms than in terms of psychological and perhaps cultural, global cultural terms. I got through most of the topics that I wanted to cover, and I want to say, Robert, I really, really appreciate it. It was incredibly interesting to hear your thoughts. As satisfying as I had hoped. I hope Torbjörn felt the same way.
Absolutely. It's super interesting to discuss Bitcoin to someone who's kind of taking the time to dig into the question of what is money. Because it's kind of, I came at it from an economics background, but it's a question that I fell into the what is money rabbit hole before I fell into Bitcoin.
Yeah.
I dismissed Bitcoin when it was pitched to me, but I figured it was like the perfect case study for me to kind of try to apply all of these different schools of thought, all of these different frameworks, kind of the game theoretic framework, the information theoretic framework, the Austrian framework, the chart list, the met list. There's so many, and money is like this topic that keeps popping up throughout philosophy, throughout history.
Mm-hmm.
You mentioned how there's so many definitions of money, and you talked about it's a way to save time. It's there's this Norwegian writer who defined money as størket mannsvett, solidified sweat.
Solidified.
Interesting.
And there's just there's so many takes, and they are kind of. Once you kind of dig into it, you see there are some commonalities here, and there's this really hard ideas to grasp, like how do you differentiate exchange from the ability to buy? Because money has this ability to buy unlike any other good.
Yeah.
But at the same time, I can still exchange a good. Is it a discount? What is it? And it's been a super interesting conversation, and really appreciate your time.
Yeah, thank you for having me. I would say that it's an amazingly complicated question, even though it seems simple. And my intuition today is just that concept of exchange is something even more fundamental than humans, than the human layer, right? The entire universe is a system of constant, ceaseless exchange.
Yes.
And money is just like our implementation or this reflection of a deeper reality. And that's why it's so important. But it's hard, it's you're at the edge. I'm at the edge of my own understanding, exploring this thing. I find myself, I forget the philosopher that said, you get to the point where you see the dim apprehensions of notions you can barely articulate, something like that. I very much feel that way with the explorations of money.
I mean, one of the deepest philosophical conflicts I've been struggling with my whole life is this notion that the world necessarily must be structured within one pattern and yet I experience myself as being separate from it. So this sensation of separation and allowing myself to accept that my thoughts and the structures that emerge from my thoughts necessarily must be a part of the same fractal. It must be a part of the same cosmos. It is not existing outside of the cosmos, even though my eyes give me the sensation that it is. And necessarily money, the theory of money, the theory of economics, especially in the last 100 years, has always felt so unreal and unfathomable to me because it was not tied to this idea. It was tied to this idea that there was some kind of separate magical land outside of this world in which we could play with these rules. Whereas in reality, with Bitcoin, I really feel like it's the fulfillment of that fractal or temporary fulfillment of that fractal. The manifestation of something that has always felt like it was inside and is now being brought outside. I don't know if that makes any sense, but I want to thank you for your show because it really brought me onto that thought. And
well,
I wouldn't have had it without it.
I'm glad to hear it. That is my goal, right? I just want people to ask themselves this deeper question and the deeper questions that stem from it. Something Sailor said to me recently that's really stuck with me. It said that you only get to play God once. So you get to set the rules for the game one time, right? And then strategies coalesce to those rules, right? So the example he gave was if you tripled gravity right now, what would happen? Everything, like that's the rule we've all adhered our strategy to. If you triple gravity, change the rules, everything collapses. All the buildings, all the work of human history, all of our hearts stop beating. We're all dead. And that's what fiat currency is, just this endless changing of the rules, right? Just driving us mad and destroying us. And thankfully, Satoshi played God once. He set the rules one time, and now we just get to adapt our strategies and move forward.
All right, that's a beautiful, great ending it with a homage to Satoshi. So I wish you a great weekend. I guess your weekend is starting over in Hawaii now. It's early Friday morning, right?
Early Friday morning, but weekends around here are just Sunday. I'm 6 days a week.
Oh, really? I was going to say, I lived in Hawaii for a few months, and weekends were every day.
Yeah, I think it's different when you live. I don't know. I credit to Bitcoin. I love my work. I get a lot of fulfillment from it, but I stay busy, So
yeah,
it's good though.
There's no way around it, and yeah, that's the price to pay for a 24/7 phenomenon.
When you do what you love, you never work a day in your life.
Exactly.
Well, I love my job, but there are days where I'm working as well. But yeah.
Oh yeah, well, I'm trying to be positive about it. I've definitely been working a lot too.
Great, thank you so much.
That's great.
Yeah.
All right. Thank you, Torbjörn, for your time. Thank you, Robert. I hope to see you again. And until then, I wish you luck in all your endeavors.
Thank you, guys.